Last week was a whirlwind. Middle East tensions flared, the Fed delivered its verdict, Congress cleared a landmark stablecoin bill, and solar stocks were hammered by a Senate budget proposal. Stick around as we break down how these events moved markets last week. Over the week, U.S. equities finished modestly lower. Early gains on hopes in the Middle East gave way to late week risk aversion as tensions reignited. Let's start with the geopolitical flashpoint that set the tone early in the week. Monday and Tuesday saw hopes that Iran get back from escalation, sending oil prices slightly lower and stocks higher off the news. But midweek, reports surfaced of fresh exchanges of missile strikes and retaliatory rhetoric, and talk of possible deeper U.S. involvement, and ended up dragging safe haven bids higher, pushing oil to 5-month highs. Midweek, the Fed held its ground. On Wednesday, the Federal Reserve left rates unchanged, keeping them at 4.25% to 4.5%. This was expected, and they also signaled 2 Fed rate cuts, most likely by the end of this year, but continued to warn of meaningful inflation risk from tariffs and global conflicts. Economic projections also showed slower economic growth and elevated inflation through 2026. Because the Fed balanced cooling inflation signs against upside risk from energy shocks and trade policy, markets digested a patient but data-dependent stance. Treasury yields eased modestly off the announcement, benefiting rate-sensitive sectors. Therefore, while the hold itself was unsurprising, the caution on inflation and a slower growth outlook underscored that any rate cuts will be dependent on sustained disinflation, adding to any market jitters given the current geopolitical backdrop. Now, as investors process Fed caution, Washington advanced a landmark crypto measure. On Wednesday, the Senate passed the Genius Act, a framework to regulate dollar-backed stablecoins, marking the first major federal stablecoin legislation to clear the chamber. Because stablecoins underpin a large share of crypto transactions, increasingly used by corporates for cross-border payments, this bill reduces regulatory uncertainty and paves the way for broader institutional adoption. Therefore, crypto-related equities and fintech names saw a bit of a pop due to traders envisioning clearer rules and innovation ahead. Broader markets took note that Washington can still deliver bipartisan milestones even as other fights continue to rage on. Finally, a heavy blow to renewable energy names emerged from budget talks. Tuesday, a Senate panel released a budget draft proposing to phase out key solar and wind tax credits by 2028. In response, major solar stocks tumbled and broader clean energy ETFs saw double-digit slides. Because investors have priced in the continuation of supportive incentives, this proposal upended forecasts for solar project economics and profitability, forcing many to reevaluate their long-term growth assumption. To recap this past week, 1. Geopolitics, with Israel and Iran tensions keeping oil and risk appetite on a tight leash. 2. For monetary policy, the Fed's patient stance hinges on inflation staying under control despite energy shocks related to geopolitical tensions. 3. Regulation, with the stablecoin bill passing, signaling that meaningful crypto policy can pass under this new administration. And 4. Policy risk for renewables, as some proposed Senate budget moves are upending the sector. Now we're on to the week ahead. Share your thoughts below on what you have your eye on for this week coming up. And as always, like and subscribe for more content and more context.